Welcome to the Lend Academy podcast, episode number 199. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's show is sponsored by Lend It Fintech Europe 2019, Europe's leading event for innovation in financial services. It's coming up on the 26th and 27th of September in London at the Business Design Centre. We've recently opened registration as well as speaker applications. You can find out more by going to lendit.com/Europe. Today on the show, I'm delighted to welcome Bernardo Martinez. He is the head of Funding Circle's US operations. He's officially the managing director of Funding Circle US. We wanted to get Bernardo on the show because he's been in the job now a little bit over a year. He took over from Sam Hodges, I think it was April of 2018, and wanted to get him on the show to talk about a variety of things. And we do cover a lot of territory in this interview. We talk about the lessons he's learned, what he brought over from PayPal. We talk about why banks aren't lending to small business. We talk about who he sees as his main competitors, the competitive landscape in the US. We talk about his recent op-ed in American Banker discussing the SBA guarantee program. We talk about the Canada expansion, what he's doing on the regulatory front, and much more. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Bernardo.
Thanks, Peter. Great to have you here.
Okay, so I'd like to get these things started by giving the listeners a little bit of background about yourself. So why don't you tell, I know you're originally not from here, so tell us a little bit about your background, how you came to be in America, and what you've done in your career to date.
Yeah, thanks, Peter. I've been actually in the United States since 1997. I moved from Venezuela to do my graduate degree at the university. And after that, I spent most of my time in the financial services industry, working in areas like Bank of America. Actually went abroad to work in a local bank in the Caribbean, managing American Express as an international operator. And prior to joining Funding Circle, I spent almost 3 years actually working with PayPal, managing the U.S. business lending division for them.
Okay, so then what are some of the, PayPal working capitals are pretty, it's got some decent scale these days, and I know you are sort of in charge of building that up. So I'm curious about what are some of the lessons you learned at PayPal that you've really brought over to Funding Circle?
Well, since I joined PayPal back then, I think the one thing that I was able to learn a lot was how important the customer experience is as part of the lending process, and how you can actually create a true conversion as you create a transparent product and an easy process. So I think that's the biggest learning that I took from PayPal, and that's one of the things that I'm very focused on since I came to Funding Circle a year or so ago, trying to replicate some of those learnings and trying to put it here in practice and basically bring the product up to par and improve upon what we got today.
Right. Okay. So you said you've been a bit over a year in the job. I know you replaced Sam Hodges, who we've had on the podcast a few years ago. So tell us about how the year has been. Maybe start what's been the biggest challenge for you over the past year?
Well, I think, as you would imagine, coming from a different type of lending environment, a short-term lending, I moved to the Funding Circle, which is more of a long-term lending sort of a provider. So I spent the last year really learning our processes and understanding our sort of what our strengths and weaknesses and opportunities. And I would say that I think the biggest thing that I've learned is that we have a tremendous opportunity to focus on partnerships. And I feel pretty good that after that first year, we're starting to see a lot of that focus on partnerships. It makes to fruition. As you know, we signed at the beginning of the year with Stripe, a partnership. And most recently, we did a partnership with Lending Club. So I feel pretty good. The first year of learnings here have resulted in a good outcome starting this year.
Right. Okay. So we'll talk about some of those partnerships in a little bit. But before we do that, I want to get to sort of the details just of your loan offerings, just so everyone's clear? I know these are longer term loans, but why don't you give the listeners just so what are the range of interest rates, loan sizes, loan terms, that sort of thing?
Yeah, so you think about us, we are offering a installment term loan product, so we'll have monthly payments. It basically goes from $25,000 to $500,000 from 6 months up to 5 years. On average, our loan size is $130,000, and our average APR is around the low teens.
Okay.
So it's a little different than what you see in the industry today, especially with alternative lenders.
Right. And then what about the other side of the business? And I know that I've spoken with Samir Desai many times, and he's spoken at Lendit, saying he's very much a proponent of the pure marketplace, and so I'd love to get sort of some sense of the investors that you're dealing with. I mean, you don't have to name names, obviously, but like, what are the types of investors that you have on your platform today? Are you still doing the fractional loans to individuals? Just tell us about the investor side.
Yeah, from an investor perspective, we are primarily a institutional investor. And what I mean institutional, there's twofold. One is sort of asset managers as well as sort of banks. So those are the majority of our funding today. As you know, last year we signed a deal with Alcentra for $1 billion and purchased over 3 years. And, also we have been working with Intrust since actually a year and a half ago, doing the same thing on the institutional side. To your question about fractional, we do have fractional today. It's not something we're growing at this point, but we're investing some time to think through how we can make it bigger in the foreseeable future.
Right. Okay. So then, I was reading, I think it was last week or the week before, you released a report with Oxford Economics talking about, basically small business lending, how the state of small business lending, basically. And I was struck by the fact that, small business lending is just 0.7% of bank balance sheets. Obviously the smaller loan sizes, but let's talk about banks, because I know you're partnering with banks on a lot of your initiatives. But are you finding that your customers no longer consider banks a viable lending option?
Well, I think what we're finding is in our surveys, like 72% of our customers actually came to us first because they found us to have a great process and a great product for them. And the ones that we didn't come first to us, they kind of found that the bank process are not up to speed of what the market is offering. So they spend almost 8 hours just completing the application without really knowing what the end decision will be. So I think that our small businesses in general are starting to look for alternatives beyond banks to really facilitate their capital access. And I think we are pretty happy to see that our borrowers are starting to see us as a great choice.
Right. So you said that your borrowers are going to you first. How are they finding out about you? I mean, is this I know you've got some recognition. Obviously, everyone in fintech knows you, but the average borrower, I imagine, still has isn't aware of Funding Circle. The majority of them, I imagine. So how are you getting the word out? How is it that such a large percentage come to you before a bank?
Well, I think there are a few things. I think number one, as you know, we're going to approach the marketing twofold. Number one, we use direct marketing as an approach, and we do direct mail, digital, print in order to reach out to customers. So some of them are going directly through our response of our direct marketing processes. In addition to that, we have done partnership with Lending Club, but also with portals like Credit Karma, NerdWallet, and Fundera that actually aggregate up a lot of offerings, and we compete in those lead aggregators marketplaces, and customers see us there and basically come to us directly. So again, I think those two prongs approaches would help us to get the word out and enable those customers to access us directly.
Right. And so then obviously I'm sure there's a subset of your customer base that would have received a bank loan had they decided to go down that route. Do you have some sense of, I mean, obviously you're going to be more expensive than a bank, I imagine, for most of those, but what is sort of how do your interest rates compare to what the banks are charging today?
Well, I think I would not consider ourselves when selling more expensive. I think we're affordable and we're close to bank. I think the main difference is actually is how long is the process going to take, and how transparent and easy the process is when you compare us to banks. So we feel that for the best grade, best risk grade, we're pretty competitive with banks, and the reality is that we can basically finish a loan from start to finish between 5 to 7 days, while a bank may not be able to respond within that time frame. So I feel pretty good that what we're offering our customers is affordable, it's transparent, and is the right. It fits what they're trying to do. And the majority of the banks, at the end of the day, we know they're very focused on their existing customers, and they don't necessarily actually have the right process for those customers. So right. I think we set in that regard.
Right. Okay, and so there are obviously others that are out there in the marketplace. If apart from banks, I mean, when I'm just curious about when you're competing for customers, and it's interesting that now that Lending Club's not originating loans themselves, it feels like that there's not that many offering term loans, but you obviously have PayPal has got a large and growing business. Square is as well, although they're obviously a much, they're sort of the micro businesses. Then you've got On Deck and Cabbage. I'm sure there's some overlap there, but maybe you could tell us, who, when you're in the market, I'm sure you're talking to your customers and like you're asking them who else they're considering. I mean, who are the names that come up? Are some of the companies that I mentioned, do you still consider those direct competitors or not?
Well, I think at the end of the day, when I look at the marketplace, I think there's three main competitors in our market. I mean, banks are certainly ones, as you spoke, and in banks, I think there are two components. There's sort of the big banks and the regionals and community banks. So those are sort of the ones that we compete with. I would say community banks are the ones that we see most of the time. When it goes to the sort of the non-bank players, I think there are two categories, and you kind of mentioned sort of the captive network, which are really the PayPal, the Squares of the world. And I think what is different about us and what we're winning in certain cases for customers is they're really focused in short term, and they're really in a way they're offering a very specific use case, which is inventory financing for the most part. When in our case, our loans have so much range from 6 months to 25, they can use it for multiple use cases, not only for inventory financing, but they can use it for debt consolidation or capital expansion. So we're winning in the sense that our product have the more flexibility, and at the end of the day, that's more important. So that's one of that, how we're kind of winning against sort of the captive networks in that process. When you go to the alternative lenders, in general speaking terms, they also focus on short term, and they tend to have a higher interest rate compared to ours. So we feel that we have a better product, and therefore we are able to sustain not only the multiple use cases that we offer, but also a better rate for them. So that's how we're winning in those spaces as well. So we feel pretty good in our positioning, and we're starting to make good traction in the U.S. As you saw, lately we released our stats, and we actually have done more than $2.2 billion in originations, and we have served more than 13,000 customers since we're starting.
Right, which I know, I think you mentioned as well, it's more than the vast majority of banks are doing. So you certainly have reached some significant scale there. I want to actually switch gears a little bit, and I was fascinated to read your op-ed from earlier this year in American Banker. It's something that's been really on my mind as well. And just to summarize, for those who don't know, you had this op-ed that basically was talking about the SBA, the Small Business Administration, and how they have this loan guarantee program that's really important, that has really led to a significant number of banks actually offering small business loans, but they have not expanded it with very few exceptions to broader fintechs like yourself. So I'm curious if you had any feedback from the SBA. I mean, what are your conversations like there? And are we going to see an SBA backed funding circle loan anytime soon?
Well, Well, we're working with the regulators in that regard. I think we haven't had a specific feedback, but there's dialogue going on. So we feel pretty good about it. I think the important part of these type of programs is we have done this in other countries. So we have programs like this in the UK, Germany, and in the European market. We feel pretty good that we can actually enable governments to impact directly small businesses when times are tough. And I think our platform is unique in that regard that they can do that. So we're trying to basically partner with the SBAs or any other government agency to help set up programs like the ones we have done in other countries, because we feel it's an important part of our mission in our platform. So yeah, nothing to share at this point, but I think there is a lot of dialogue going on in terms of what we can do and how we can do it. I'm pretty hopeful that we can do something.
Right. So just on that, because I know your operation really well, and I know in the UK you've got the British Business Bank that actually invests directly in the loans, and I think the European Investment Bank is doing it in Germany, I believe, or it might be Germany and the Netherlands. You can correct me there. But so these initiatives are actually, government funds going directly into the loans themselves, like as an investor on the platform, which is different, obviously, to what the SBA does. Are you saying that you're also, I've never known, I don't know of in the US any government investing directly on in any platform, but are you having those conversations as well?
No, I don't think we're having those conversations yet, but I think what we're trying to tell the regulators are trying to start having those dialogues is about how we can basically either leverage the existing structure that they have in place and how we can work it through it. We don't have to mimic necessarily what we have done in the European markets, but definitely we would like to have being a partner of the government to helping the small business in the market. And I think that's what we're trying to work through it.
Right. Okay, so I want to talk about partnerships, and let's start off with the Lending Club one, because was in the news fairly recently, and I wrote a piece about it. We had a conversation before that was announced, and maybe tell us a little bit about the background of how that came together and just how you decided. Obviously it's a nice, borrower stream for you guys, I imagine, but just tell us a little bit about how that process came together.
Well, I think that one of the things that I like about the Lending Club partnership is that if you go back into how the industry kind of was formed, we have been working with Lending Club since the inception to really kind of advocating in the policy forums around transparency, responsible business lending, and we have been working, since the beginning on that, in those two topics. And I think when the opportunity came, it was pretty good to see how we can, both of us, including Opportunity Fund as well, can the three of us partner together to really put our policy sort of thought process into action in a partnership. So now you have the three of the major players that have been advocating for transparency and really pushing a lot of legislation around that to be a responsible lender, to kind of offering a small business owner what we truly believe is the most transparent and more robust lending that we can offer to the small business owners in America. So it's fascinating how we move from policy to actually action. And so I'm pretty excited about that. And I think the partnership will be a great success for all the parties involved.
So, it's only been a couple of weeks. How is it? I think you went live. We're recording this on May 6th, and I think it was just a couple of weeks ago that you went live. But are there any initial thoughts on the traction the partnership's getting?
I would say things are working well. We will not disclose any numbers, but I think in general the partnership is tracking on expectations.
Right. Okay. So something that is curious to me, and it's actually not unique to the US, that you guys have done extremely well in small business lending in multiple geographies now, and obviously the two biggest are the UK and the US. And it's interesting to me that in the UK, no other company has got significant scale when it comes to small business lending, of online originated small business loans. And the same now, particularly with Lending Club sort of now moving to being a partner of yours rather than a competitor. No one in the US is really getting scale in the online space when it comes to small business lending, term loans I'm talking about, obviously. So why do you think that is? Well,
I think at the end of the day, a small business really it's It's a very different segment, and I think that's one of the reasons why banks have struggled in the past. And at the end, the key of this segment is really requires a lot of focus. So when platforms or companies decided to enter the segment as a sort of as a secondary item within the more broader strategy, it's hard to make it work. And I think that's what we have been decided a while ago, that we want to focus on this segment alone. And that's where we're putting our effort and energy. So I think that's where we have been successful, is the focus that we have had and we will continue to have in the future is going to be the key differentiator from us from the rest.
Right. Okay, and I noticed another thing you announced recently was expansion to additional country. It's going to Canada. Now, I'm curious about this because obviously Canada, directly north of the border here, but has a banking system probably more similar to the UK than it does to the US. So how involved is the US operation and going to be in building that business, or is it really going to be run out of the UK?
Well, I think at the end of the day, I mean, we actually have somebody dedicated to the Canada business based in Toronto. So at this point, we decided to enter early in the year, and I think we'll see operations up and running in the second part of the year. We have somebody dedicated. The person came from the UK, but at the end of the day, we're really focused on trying to build the Canada business from there.
So what you're saying is you're really building it internally. It's not like there's no US resources going into building that Canada business.
Well, we always have subject matter in the US that are helping them, but at the end of the day, it's a Canada kind of led organization at this point.
Right. Okay. And speaking of geography, you guys expanded recently to the city where I live, Denver, Colorado, and you were kind enough to invite me to your opening party last year. And I know there's been a lot of talk in San Francisco, really, in the last few months. You've seen a lot of people talking about companies leaving, or and in the fintech space, there's a lot. I would even say most of the companies now that have scale have operations elsewhere beyond just the Bay Area. And you decided on Denver, so maybe you can give us an update. I mean, I think the office must be about a year since you opened that office now. Tell us a little bit about who are you hiring in Denver? What's going on in that office?
Well, Denver actually opened in August 2018 last year. So, I mean, we feel pretty excited about our Denver operations. I mean, we have had very success hiring people and having a great team there. So currently we are around 60 plus number of people. Predominantly, it's basically sales and operations roles that we are focusing in there. And I think we feel pretty good. I think what is important from us is we're really committed to San Francisco long term. We truly believe that we're getting a lot of good talent as well here, different talent in different part of the organization, but we feel that we're going to have presence in both places to be successful in the United States. So, we feel that the decision we made last year was the right one, and we feel pretty committed to that strategy at this point.
So you're going to be growing the San Francisco office as well as the Denver office. Is that fair to say?
It's fair to say yes.
Okay. So I want to talk a little bit about government relations, and we were both in DC a few weeks ago for the Marketplace Lending Association event, and as you pointed out, you've worked closely with the founders of that organization, were Lending Club, Prosper, and Funding Circle. So I'm curious about what the level of engagement with DC is these days, and are you still talking directly with regulators? Are you sort of leaving it to the MLA? I mean, what's your approach in DC these days?
Well, we always leverage our associations to kind of have a conversation on the specifics around the industry level, but we also have direct conversation for topics that are outside the sort of the scope of an MLA. As you know, in the MLA, there's a lot of consumer sort of companies and not necessarily small business. So we definitely have certain issues that are not necessarily relevant for the MLA. So we have a two communication process, one through the MLA when it's necessary, and some that are directed that are trying to address our voices. The one important part for us is that we also have a lot of dialogue at the state level. As you know, we're a little bit different than other platforms that kind of use a bank charter. We actually have our state license model. So we had a lot of dialogue at the state level as well. And that's a lot of our focus these days, is really having that dialogue at the state level.
Right, right, and it's interesting because you talk to politicians. I mean, there's not many issues that are bipartisan. It seems like these days, but helping small business is one of them. And everyone at least wants to talk about doing the right thing for small business owners. So, are you finding that are you finding that these conversations actually progress into and you feel like your opinion is heard in these, and then both at the state level and the federal level?
I think you're right. I think the reality, everyone wants to help small business owners succeed in the marketplace. I think we feel pretty good that every time we are trying to get our message across the different state or federal agencies or regulators, we feel pretty good about it and how receptive they are of what we're doing and what we're trying to achieve. So I think they're pretty open. As you said, they're very focused on trying to help their constituency. So we feel we have a right message for them, and we feel that we can make traction.
Right, and so you guys, I know there was a change in California. There was SB 1235 that came in around transparency, because we have, like, there's this Truth in Lending Act that mandates a certain format of the way when you're taking out a consumer loan. There is no equivalent on the small business side, but SB 1235 is mandating that. Were you supportive? Were you part of the conversations when that was sort of getting passed?
Yeah, I think actually we were one of the leaders behind it with Lending Top and Opportunity Fund as well. So this is a perfect example, Peter, of the mention. This was something that we wanted to do because we felt it was right to have a framework that was about transparency and responsible lending, and we kind of partnered with the regulators, and they were waiting for us to come to the table. Mm-hmm. So, and that's how things got passed.
Right, it hasn't been implemented yet, right? You're not actually having to, there's no sort of equivalent form that has been mandated yet. Is that correct?
I mean, the legislation was passed, and now it's to the DOB to actually finalize the specifics around it. But the grounding principles were set.
Right.
So, but I think at the end of the day, but that's a good effort in how you can work with regulators at the state level to kind of frame a good policy around transparency.
Right. So then that's sort of one win. But what are some of the other areas when you're talking with regulators today? What are some of the changes you'd like to see that would make a difference for Funding Circle?
Well, I think the more that we can go to a sort of a federal type of commercial truth in lending as we did in California, the better it will be for us, because that will create a national framework that is similar across all the states. And every time you have a national framework, enables you to have a more, to have a simpler operations and easier to execute, and also be more transparent, easier to communicate with customers. So that's one item that we're kind of very focused on. I think in addition to that, we're kind of very vigilant on the CRA reform, and we're also kind of participating in the dialogue around IRS modernization, which we feel is very important as we continue to provide lending to our customers, because the easier they can get access to their data, the easier it is for us to provide them processes and customer experiences that are easier for them to get their loan. So those are some of the topics that we have top of mind.
Right, I know that IRS issue. I mean, I think your predecessor, Sam Hodges, wrote an op-ed on that many, many years ago. And I know that others have mentioned that having sort of API access to IRS data would be a big thing. And I know there's been movement on it in Washington, but nothing's actually happened yet, unfortunately. So anyway, we're almost out of time, but just a couple more things I want to chat with you about. Firstly, so you look at your business today, you're a two-sided marketplace, you've got your borrowers and your investors. Are they perfectly in balance today? Are you is one side constraining growth over the other, or where are you at?
Well, I think as any marketplace, you always are balancing. And actually, even if you look at banks, actually the same. I think at this point, what we're trying to really get to is really the right balance from a growth perspective and risk reward from an investors. And I think we're right now at a good balance at this point of our journey. I mean, we will continue to, depending on the market, adjust those expectations, but we feel pretty good that we have struck a good balance and at this point.
Okay, so then, and just on that, then, I mean, the economy is still doing great, but everyone keeps talking about the fact there's going to be a recession at some point, and there will be at some point. Although we could be like Australia, where I think they've gone like 28 years without a recession, so it's always possible that there's a long way off. But are you adjusting anything for where we are in the economic cycle?
Well, I think what we typically do, we have a robust risk process in terms of monitoring and stress testing our portfolios, and I think we have shared to you and others how we have done that. And when we see and observe something that it go outside our risk appetite, we tend to adjust. But generally speaking, we haven't done anything right now that is cyclical in nature. We are adjusting things that are not performing as we expected, as you normally would do in any lending product. If you see a cohort not performing as you would expect it, you tweak you calibrate as you see fit. But from a recession perspective, we're not at this point worried about it. But we will continue to monitor our portfolios on an ongoing basis.
Okay. So last question then. So what are you working on today that's most exciting for you?
I mean, I'll come back to the issue about the topic about partnership. We're really focusing our growth strategy about partnerships. So I'm spending a lot of my time thinking through what are the type of partners that we want to work with and how we can accelerate those conversations in order to make those partners reality. So that's one of the key themes that I'm working on today, and I feel that we're making a ton of traction as we have seen in the last quarter. And I hope that we will see more news in the foreseeable future around this partnership strategy that we have embarked since I came in.
Okay, well, I look forward to hearing more news on that. And on that note, we'll have to leave it there. Thank you very much for coming on the show, Bernardo.
Thank you, Peter, for your time. I appreciate it.
Okay, see ya.
Thanks.
One thing I appreciate about Funding Circle is that they really have maintained this laser-like focus on one product. They operate in multiple geographies, but they operate with this one product, term loans to small businesses. And there's obviously a lot of adjacent products they could go into, and they've chosen not to. I mean, they did have property loans in the UK for a little while, but they've since gotten out of that business. And they've maintained this focus, and they've reached significant scale now in multiple geographies. And really, they are one of the very few fintech companies, particularly on the lending side, to do that. And so I think that my sense is that this kind of lending is difficult. These are 3, 4, 5 year loans to small businesses. That there's a very heterogeneous group. There's not a lot that these companies have in common, and I think it's difficult to underwrite these things. And obviously, banks have been doing it for decades with the SBA help. Now, I would wonder how much they would lend if they didn't have SBA guarantees in place. Funding Circle has done it obviously without that, and they continue to build their business, in a significant way in multiple geographies. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's show was sponsored by Lendit Fintech Europe 2019, Europe's leading event for innovation in financial services. It's happening September 26th and 27th at the Business Design Centre in London. Registration is now open, as well as speaker applications. Find out more by going to lendit.com/Europe.